Hey everybody, testing 1, 2, 3. I think I should be live. Just had a big computer malfunction right before I was about to hit the live button. So it's a good thing it didn't happen during the live stream. So thank you all for being here. It didn't happen during the live stream. So thank you all for being here. It didn't happen during. There you go. We're live. So let's talk about exactly what's going on right now. This is going to be called Crypto Realities. It's still September. The market's still weak all across the board, but there are some positive signs. Crypto market is down to 1.04 trillion. We lost about 60, I don't know, quite a few billions anyway since I did this a week ago. I can't remember the exact number. Bitcoin still at 26,160. Literally is it's the second week running of exactly the same place at the same time on the same program. It's ridiculous. Bitcoin dominance is down to 48.9%, which is good. Ethereum is making a move. We'll talk about that too. ETH dominance up to 18.3 from about 18 last week. And fear and greed is at 46. Again, same as last week. So let's jump in. And of course, none of this is financial advice. Thank you all for being here. Thank you to the mods in the chat. And a big thank you as well to Glenn Johnson and Vicious Lee. Haha, saw you earlier actually on Discord. Anyway, so this is edutainment. We know that. And also, if you want to get smarter, I will do a deal. If you learn something new, hit the like. If you don't need to. That's it. But this will be a big bombastic session always, and I won't waste your time. And everything is recapped in a newsletter, 12 cents a day for that every day. And let's start with the good news. Last week, it was nothing but ugly news. This week, there's lots of good news. Let's break it down. First of all, crypto stats today. I put in last week's numbers as well as a comparison. The market cap, you see, it has come down quite a bit from 1.117 trillion down to 1.085 trillion. Of course, it moves around all the time. But the number of users went up by over 1.2 million users, which is pretty big. That's a 4.43% gain. Transactions went up by 9%. To 35 million from 32 million. So it's good to keep perspective as to how alive this whole space is. And literally, as each day goes by, there's nothing but TradFi companies coming into the space. Citigroup have an enterprise blockchain now they're launching, and there's some other banks doing some other cool stuff too. You got some money sending firms like MoneyGram building their own wallets. It's happening. Crypto's being adopted. That's good. Fear and greed, 46. You can see flat. Another flat line. The fear and greed is very similar to the Bitcoin chart. In fact, you wouldn't even know what you're looking at sometimes. And let's look at two things that I think are kind of very interesting. And this is on the left-hand side. You've got the Bitcoin transactions over the last 12 months and how they've gone up from about 250,000 transactions a day to north of 500,000, which is doubling. Now, on the other hand, on the right-hand side, you've got the transactions on the Ethereum network down from about 1.1 million down to about 1 million. It's not as dramatic a difference, but it's still down 10%, but slightly. So not too bad. It's good to see Bitcoin growing. Of course, a lot of that is driven by things like layer 2 activity on the Bitcoin chain, but also a lot more adoption too as the world goes more into a crisis. People are beginning to wake up that they need that so-called schmuck insurance, or a life raft, as I like to call it. Now, other stuff is happening around the world. Bankruptcies are exploding. I did a video on this like a month or two ago about how there was crazy bankruptcies on the rise. But now you can see Bitcoin and Ethereum are still positive for the month of September, despite a surge in bankruptcy filings. Wow, that's hitting the mainstream media. And it really is showing tremendous resilience as traditional markets quake. The yen is tanking. Of course, all fiat's tank. There's no surprise there. The bond market is very turbulent. People are getting wrecked even more than last year so far. So that's all. It's actually nice to see crypto doing its thing. Steady Eddie, hanging in tight. Now, let's look at another positive sign. And this is from Look Into Bitcoin. And I thought this is really cool. I was going to deface their chart and add some lines and trends and delays and calculate them. But it's easier to look at it clean. So this is basically the teal color on the left axis is global M2 money supply, not American M2, but global M2 money supply. And you can see ever since November 2022, it's been on the rise. We all know that central banks are kind of curtailing the money supply, but literally it's been growing. It's been off the base and increasing since where I put that red line in the chart. It shows you the time at which it started increasing, i.e. going positive again. And that is a good thing because Bitcoin acts like a sponge. It absorbs global liquidity. And when liquidity dries up, Bitcoin becomes brittle and its price falls. But the corollary is also true. When the money supply goes up, Bitcoin absorbs some of that money and it grows. It becomes nice and fluffy and soft and wet and everything else. Now, again, as you can see here, if we go back in time and we look at when the money supply has grown and compare that to Bitcoin price, there's a delay, typically 3 months or so from the money supply growing, maybe 4 months to actual price action of Bitcoin responding. And Bitcoin hasn't responded yet to this increase in money supply, and it's subtle. But if you take $110 trillion and you add 3% to that, that's a lot of money. And that's what we're looking at. So the global money supply is about 110 trillion. Adding 3% is about 3 trillion. And part of that will trickle into the Bitcoin asset over time. It takes 3 to 4 months. So this bodes very well for November, December, maybe even October too. And October is one of the best months historically as well for Bitcoin. And we're coming out of September and Bitcoin is up 1%, which is okay. It's not down 10, which has happened many times in the past too. Now let's look at one of our models. This is called the top and bottom indicator. What's interesting about this, analyzing it today, it has different color codes based on the coolness of the market, i.e. the more bear versus bull, when things kind of are cool and a great time to accumulate versus a great time to get out, get off the train. Now, if we look at that dip on the right, it doesn't correspond to price because there's about 20 factors that go into this indicator to determine when it's not or when it is a good time to buy. And even though the price is held steady, Bitcoin has become cheaper in many, many terms and many indicators, which is also fascinating to look at going forward. So again, even though we're still 26K, in relative terms to other assets, it's become cheaper. Remember, everything debases over time, unless it's denominated in Bitcoin, like Bitcoin is. So let's talk about another thing that's happening, which is unusual in the marketplace: trading volumes. The lowest level since March 2019. And this is insane. And the reason for this, and people are saying, oh, Bitcoin's dead, it's not being traded. Hold on a second. Didn't I just show a chart where it's very, very active? Yes, I did. But why is trading volume so low? The answer is very simple, ladies and gentlemen. Guess what? If you look at the little yellow line here, obviously the candlestick chart is the price action, but the yellow line is what I want you to focus on. That is the amount of Bitcoin on exchanges. And Bitcoin is seeing its lowest level of trading volume in terms of dollar value, not only because the price has gone down, but also since March 2019. And also the decline has coincided with the fall from peak of Bitcoin supply on exchanges, which happened nearly 3 years ago. Nobody is trusting the exchanges. In fact, I think Huobi changed their name to HTX, what could be more tone deaf, and they got hacked for, I think, 5,000 ETH. So again, get on the exchange, do your business, and get off straight away. I think that phrase was coined by Ran from Crypto Banter. So let's look at money flow too. Very, very important. Digital asset fund flows. Even though it is slightly negative for the 6th consecutive week, it's almost at break even, totaling only $9 million, which is nothing compared to the total asset class. But there is still a diverging sentiment as well from a regional perspective. And Europe had $16 million of inflows. And the US pulled out about 14, and the rest are kind of all over the place. Hey, Clint, thank you so much. Got some Canadian news coming up for you too in a while, so stay tuned for that. But net, this is not too bad. We're getting close to break even. And I think once we get out of September, people were historically worried about being in Bitcoin in September. So they got into a lot of short positions. They took their chips off the table and also their crypto off the exchanges as we go forward. Let's look at the different assets, flow by asset here. As I mentioned, Bitcoin did see minor outflows. Short Bitcoin also saw outflows of about 2.8 million. That means people are getting out of their short positions because they didn't pan out. Hedge funds for the first 6 months of this year were heavily short the market and they got creamed. So sometimes when you see a lot of short positions, even the professionals can be on the wrong side of the trade. Now, the $50 million of inflows you can see here are kind of interesting. Litecoin got 500,000, Solana 300,000, XRP 700,000, and a mixed bag of other names pulled in some money too, like Polygon and a few others. But it was interesting to see XRP is still garnering a lot of attention and pulling in quite a bit of money too. So things are not all dead. Let's look at a couple of pair charts here and see where we are. This is the ETH Bitcoin pair chart. And I'm kind of teasing out a new thing we're working on called the ATR, which shows you the levels at which things trade at over time. So you get a very good perspective of where you are in the market. So what you can clearly see here, if you go from, say, middle of 2021 onwards, what do you see? Well, this is the ETH Bitcoin pair. It's at 0.06. It typically bounces off this level. At least it has done over the last 3 years. And my reckoning is it could potentially do that again. So I do believe that ETH is in the kill zone. So for those who are pair traders like myself, that's when you could potentially rotate Bitcoin into ETH because it is oversold based on this model. Let's come back in a couple of weeks and see if the model is correct. That'll be interesting. Another pair as well, Solana over Avalanche is up 145% year to date, despite the fact that Solana is doing bad. People feel it's doing bad this summer. It's still doing very well compared to its peers. Avalanche was a so-called ETH killer. So is Solana. But the interesting thing, the reason I'm showing this too, is compendium scores matter. They predict how good an asset will perform based on a compendium score. So it's good to see that it worked really well here for these two. Now, are we in altcoin season or not? Let's check this out. This is interesting. It spiked to 55, which is more alt season than Bitcoin season. What is going on here? This is a big surprise considering we're coming into the halving. Are alts really coming into their own right now with proper use cases and adoption and everything else? The answer is yes, they are. Let's look at what has happened over the last 7 days in the market, and then we'll drill into some of the overperformance, underperformance of altcoins. Here you can see this is the crypto market over the last 7 days divided by Bitcoin. ETH down to 0.06, that critical 0.06 level. Do not forget that we're going to come back to 0.06 in a couple of weeks and see if it goes higher. I see it going to 0.07, then 0.08, and then 0.085 over time. But ETH lost 1 percentage point compared to Bitcoin. XRP is up compared to Bitcoin. Binance, Matic, Tron, Sheeb, Leo, Avalanche, OKB, etc. So not too bad. Dark green as well for Chainlink. We'll talk about Chainlink in a minute too, because that is performing pretty well of late. Let's look at the top performers over the last week. Chainlink wins over the last 7 days, up 10%. Maker up 5%. Aptos up 4%, despite the crazy inflation. Go figure. Year to date, 33% Chainlink. Big move. Maker up 161% and Aptos 56%. The losers for the week are Rune, Ton, and Optimism. So that's kind of where those things are. Now, since we're talking about Chainlink for a second, let's drill into the LINKETH pair to see how Chainlink has done compared to Ethereum over the last 3 years. I'm talking a lot about the last 3 years because it kind of encapsulates the top of multiple, going through multiple cycles, not only the last bull, but also through the bear, etc. What's stunning about this is the LINKETH pair over the last 3 years is down 90%. So if you had a choice of holding either Chainlink or Ethereum, you want to be holding Ethereum. Despite Ethereum is down a bit too, nowhere near as bad as Chainlink. And that's where you see the real truth as to where an asset is performing. Now, zooming into this, you see a little head pickup above the 200-day moving average. That is the Chainlink rally we are seeing. So yes, over the last couple of weeks, Chainlink has done very well against ETH. But over the last 3 years, it's down 90%. So things will always have their day. Every dog has its day, as they say. And that is one of those right there now. So I have said as well many times in the channel, link at $5 or $6, sell it at $8 or $9 is a very nice pair trade. Now, let's look at the top 3 last week as well. The big players, this is Binance, Bitcoin, and Ethereum. Binance actually down 2%, Bitcoin down 2%, and Ethereum down 3%. Binance is still hanging around that magical $215 level where they have to support it, or else some type of liquidation goes on. And of course, the press about Binance is incredible. But CZ is still alive and well and very funny and active on Twitter. Follow him there for some fun. But again, Bitcoin, 26,200. In fact, if I look at the price right now, it's 26,135. It's just so quiet. And people are losing interest. But that's why we have equities too, which are very, very important to play. In fact, equities have saved us this year. Not crypto. Crypto's been good, but some equities have been even better. Let's look at the top 50 over the last 90 days. You can see Bitcoin is the black in the middle. It's down 10.5% over the last 90 days. Not too good, but other names have done very well in comparison. On the left, you'll see Maker, XTC, Chainlink, Solana, Tron, XLM, XRP, Optimism, Hedera, WBT, Aave. Nice to see Aave in there. Shiba, and etc. etc. You get the idea. And on the right hand side, you got Stacks and Avalanche and ICP and Arbitrum and Sand and Elrond and Cosmos. Again, it's very interesting when you compare how these things do to the correlation with compendium scores, and there'll be more coming on that real soon because it is fascinating. Anyhow, let's look at potential for Bitcoin recovery. There's bad news coming. Don't worry, it's not all good news here. But this is the Capriole Bitcoin Macro Index. Now, it's really, really hard to see, but we are in the middle of a contraction, that red piece. But at the very bottom right-hand green next to the red is a little tail for recovery. So we are on the cusp of turning around. If the Capriole Bitcoin Macro Index chart is correct, and what I like about it is 40 different on-chain metrics in this model, and I love the way people do that. I love doing that myself. Getting a whole bunch of stuff together and finding confluence, signal in the noise. One indicator doesn't cut it, but when you pull 40 together and you have history to prove it works, then it works. Let's look at another thing, and let me know as well if you want to do an update of the miner video. I'm a little overdue. So much has changed in the miner world, but this is also a pretty important chart as well I want to share with you all. Again, from the team at Capriole, you can see here it has a beautiful view of the electrical cost on average for Bitcoin miners to produce one Bitcoin is $21,243. In fact, Bitcoin price was $26,243 only a few minutes ago. That's a $4,000 difference. So for you to make a profit mining Bitcoin, all of your equipment, your co-location facility, your security, your staff, your overhead, your interest and expenses, all have to be covered by $4,000 for every Bitcoin you mine. And the truth is, very few make it. The average production cost for all miners today is $35,430. So with the Bitcoin price where it is, even if the Bitcoin price, I imagine it's $25,500, which is $600 from where it is, they're losing $10,000 for every Bitcoin they mine. Okay, so not many miners are making bank right now, and that is going to be important to look at. And as the Bitcoin halving comes, unless I say the Bitcoin price doubles, these miners are in hot water. And there's no ifs, ands, or buts. And I've shared a number of models on that as well. By the way, I did share a model on, there was some confusion regarding my Bitcoin miner model, which looks at financial ratios as of today, and my post-halving model, which looks at what's happening in May 2024. They're both very different things, and they both have a different set of assumptions. So bear that in mind as well, in case you see those things flying around. Now, more mining news, and a reminder again, drop a comment below if you want me to do a miner analysis. Let me know. I work for you. I don't work for YouTube. This is for Jamie Coots, and I love this little chart because it looks at the top 3 public miners on the planet. And we knew Marathon and Riot have always been top 3 for the longest time. But now we have CleanSpark in the top 3. A couple of things here. You have the actual market cap, $600 million. The hash rate is out of date. It's now, I think it's 9.5 for CleanSpark, but that'll be updated this week if you guys want that video. And share of global hash rate is also higher. But the key thing I want you to focus on here is the big Wall Street firms like Vanguard, BlackRock, State Street. They own 20% of Marathon. They own 19% of Riot. And now they own 12.1%. It's probably higher of CleanSpark. And some of these positions they've been in since the year 2020. It's not a new adventure. So Wall Street has had their eye on crypto for a long time in Bitcoin. And this is how they get in. They also buy up a lot of MicroStrategy too. So remember, BlackRock coming in is not new. They've been in for a long time, and they will be in for a long time. And then the other piece of concern I always get from people is, oh, what happens if Wall Street controls more than 51% of the hash rate? Well, they'll never get to that level. Just looking at these numbers here, even if they owned 100% of the top 3 miners, they would only have, what, 8% of the total hash. So that would be extremely difficult for them to get to. And it would be absolutely cost prohibitive too. So remember that. So don't worry about that FUD that's out there. Now let's look at whether or not Bitcoin miners are a good buy. This is from Econometrics. And I believe some are. The year-to-date results for the Bitcoin miners were bombastic. This is why we do equities, ladies and gentlemen, because the returns are outrageous compared to crypto, which can be almost flat. But if you look at the Bitcoin miners and other Bitcoin proxies, it can be insane. Remember, these things are highly correlated to Bitcoin, but they're a levered bet on a levered bet, which makes them extremely volatile. They have their good days up when the market's going up and you get amplified returns, but also when the market's down, you get amplified returns to the downside. So the question is, will these continue to attract a lot of institutional money? I think so, because institutions will grab any proxy they can get their hands on. And will these miners do well? Some of them will, some of them won't. Stay tuned for more. Now, speaking of another company jumping in, not just TradFi, but Microsoft plans to have a crypto capability for their Xbox, which is a video game console, which I know nothing about. But they recently leaked documents that reveal the tech giant Microsoft plans to integrate cryptocurrency wallets into its Xbox gaming console to allow in-game payments, purchases, e-commerce activities, all that type of good stuff. Big news, and it's very undercover. And we know that Apple are doing a lot of very undercover stuff too. There's this whole world of kind of TradFi is jumping into crypto, and big tech are jumping into crypto, and Elon Musk with X is jumping into crypto and payments. The question is, what will emerge over the next 5 years as the top finance, TradFi, financial payment, crypto platform? I think it's going to come from the technology side of the house. I don't think it's going to come from TradFi. It's going to be such an exciting time and place to watch too. So bear in mind. Now, buckle in everybody. Bad news time. Let's look at the crypto market over the last 7 days divided by the US dollars. Oh, quick shout out to everybody in, if I can see. Whoa. Seattle. We also have, I have more per capita viewers out of Seattle than I do out of New York City, which is a traditional finance hub. Mind-blowing. I don't know why. Anyhow, the crypto market over the last 7 days, you can see Bitcoin's down 2%, ETH down 3%, Binance, XRP, etc. The only things that were up were Leo, Tron, Chainlink, as I mentioned before, etc. Atom down hard, which is Cosmos. So things are mixed. It has not been a good last 7 days, unfortunately. Let's look at the stock market. I shared this chart a week ago. It was all red too. So it is still continues to be ugly. Amazon down 7.3%, Tesla down 7.7%, Google down 7%, Apple down 3.3%, Microsoft 5%, Nvidia 2.8%. Yes, it's been ugly. Even the oil and energy stocks are down. The only thing up is United Healthcare that I see. And AstraZeneca getting ready for the season. That's coming. So again, Rectember has happened in equities, but not in crypto. And we got 4 days left. Wow. So let's hold on tight, keep our fingers crossed, and tread carefully. Next, let's look at Bitcoin Nasdaq Correlation. This is always interesting to see because we like these things to split so you can better manage your risk. But over the last 90 days, QQQ is up 1.4%. Bitcoin's down 11% over the last 90 days. So not exactly correlated, which is good. Bitcoin ran very hard early in the year, and then tech ran hard in Q2 onwards. So it's still holding up. Let's look at Grayscale discounts. This was a huge shift that I did not expect to happen this week. But last week, the GBTC discount was 21%. Now it's nearly 23%. So it looks like it's gone a little bit out of favor. And the ETH discount was 27% last week. Now it's 32.5%. So a big move there. It looks like people have stopped buying the Grayscale products. And that lack of demand has meant the discounts are changing quite rapidly too. I just noticed a little typo in that sheet, but I'll fix it later. Anyway, China for Tesla is also looking pretty weak for all the Tesla holders out there. It's been a great year for Tesla, but boy, Q3 is looking weak. You can see the green line here for 22 Q3 out of China based on insurance data, which is a very good indicator for new cars sold. And obviously the last month has fallen off a cliff pretty hard. But remember what they did, and they broadcast this in Q2 in their earnings call. They were going to shut down factories. They were going to revamp them to make them more effective, more efficient, more scalable, much more throughput. And also in China, they're launching the new Model 3 Plus, Model 3 Refresh, Project Highland, whatever you want to call it. Everybody will not buy the old car. They'll wait for the new car. So that puts a dampener on actual sales too. So expect maybe Q3 to be bad for Tesla, which will be a buying opportunity for us. So we're just waiting in the winds, and that's why we're sitting on some cash as well. Now, UAW strike update and stock options is a great post from Sawyer Merritt, and it's a crazy stat of how an employee stock option in Tesla, Ford, and GM compare over the last 10 years. If you were a factory worker at Tesla, you made 1,900% on your stock options. And there are many people that work on the line that are millionaires just from this. Okay? Many people. GM, you would have lost 10%, and Ford, you would have lost 30%. So, yeah. What's in your wallet, as they say? And a lot of the strike stuff is happening. We have the President of the United States is now picketing with the strikers for the big three automakers in Michigan right now. I guess, looking for votes, but there's also threat of a government shutdown too. I think he should be working on... Anyway, I'm not going to get political. Just prioritize certain things. Now, speaking of Canada, this is a stunning chart here, and a big thank you to Sanjay for sharing. This is housing dependence and the percentage of how much an economy depends on real estate. Stunning. I always say everybody needs their castle. Everybody should have some real estate. But this took me aback. Germany is at about 34%, 35%, which is called it a third. Canada is at 42%. Now, why is this important? Well, there's a couple of reasons that I see why it's important to the Canadian economy. One, it's a major source of employment. The construction industry employs, I think, over 1 million people in Canada, which is staggering. And the real estate industry, the buying and selling of properties, employs over 300,000 people. Second, housing is a major asset for Canadian households. The average Canadian household has over $500,000 in equity in their home. That means if you have a house worth $1 million, your equity is 500. That means you owe 500,000 on it. So it's a big source of wealth for the Canadians up there. And shout out to any Canadians here in the chat. And this equity can also be used to finance other purchases, such as a car, a child's education, etc. But the third thing is it's a major source of government revenue. Property taxes are a huge source of revenue for municipalities and federal government, etc. But the fact that housing accounts for such a large portion of the Canadian economy means that it's important to monitor the health of this sector. If the Canadian housing market crashes, it will have a huge impact on the economy. Now I'm looking at real estate crashing in places like the US and Germany, all of a sudden, even a little bit in Sweden. And I'll do a global real estate update soon, but watch Canada carefully because that could put a dampener on things. Anyway, time for some ugly news. As always, buckle in. Token unlocks. We do this every week, and you guys like it, especially if you hold a position. These are the big token unlocks for the week. Gal has about, I can't remember how much. Oh, not too bad. 700,000. Yield Guild Games, 2.6 million. Euler, 413,000, nothing. Sui, 500,000. They're going to be there every week. But big one, Optimism. 30.68 million of dumpage coming your way. GMT, only 400,000. 1 inch, nothing. DYDX, $4 million. So they're kind of the big ones just to call out. So if you have any positions in any of these assets, be careful, especially that red one there. Wow, Optimism, $31 million coming your way. And that is actually also reflected. See the way you can find correlation. I may scroll back to this one here. Optimism, down 11% for the week. Maybe people are actually already getting ready for the dumpage that's going to come their way. So that was token dumpage for the week. Let's look at another piece of bad news, how to crush a small business. And this is happening all over the world. I'm just giving some US data here. Small business average interest rate paid on short-term loans is now over 9%. That is crushing. If businesses need cash, money to cover things like little gaps between buying and selling stuff and inventory and making payroll and all that type of stuff. But now they just added a big 9% cost on top of the business every time they go to borrow money, even if they are lucky enough to get it. Because a lot of the banks have closed their purse strings as well because they're going to suffer from the commercial real estate crisis and they've had drainage from deposits. So this is going to put a big dampener on the economy, not just in the US and other places. And we have a government shutdown too. While President Biden is in Detroit, we are 4 days away from a government shutdown. Why do we care? Well, it's funny. The government shutdown would make the blind blinder, as I say. It would blindfold the Fed in piloting a course on rates, because if the government does shut down, there's many things that are going to stop altogether. But one of the things will be all the companies that provide the data, the Fed indicators, all the measurements, etc., would really confuse them as to how they would steer their ship forward. And now a lot of people believe if this shutdown happens, not only will it be the costliest shutdown in the history of the United States, and this is on top of things like strikes happening, but in this day and age, for these types of things to happen is just absolutely ridiculous. There's got to be a better way, ladies and gentlemen. There has to be. Anyway, enough of that. US savings, sadly, also have been depleted for the bottom 80% of households. Why do we care about this? Well, US excess savings are out. That means 80% of households can no longer throw money into things like crypto, etc., because they don't have it anymore. And this is serious because it means that these households have less money to fall back on if they have any type of financial hardship, such as a job loss or unexpected medical expense. It also means that they have less money to spend on goods and services and crypto, which can slow down the economy. That is staggering. No money in the kitty for 80% of households, which is very, very sad. But we have Chase coming in. They're going to keep us safe. JP Morgan's UK bank Chase to ban crypto transactions. You will not be able to pull money and push it to a crypto exchange or anything else going forward. And I add a little other orange arrow as well, because JP Morgan were able to settle the Jeffrey Epstein sex trafficking suit with children. So JP Morgan, they've got your back. And finally, indicators, some new service in there. There is 50% off the first month of service using coupon code month50 at InvestAnswers.io. Products like Arb Cloud, Bitcoin Top and Bottom, DCAS, IDSS, Layer In, Layer Out, Macro Model, Pair Trading, and Steroids. We only make products that save you money, and we only charge enough to cover the cost. We've had hundreds of requests. It's like, can you do a deal? Can we do a 1 month free trial? We've got to just be able to cover at least some of the activation costs behind the scenes. And some of these products are only $19. like DCAS, which can be very good if you want to accumulate a position or layer in, layer out to get into a position or profit take on a position too. It's all there just to help you be better investors with good tools, because you can't fly blind in this market. You need data, you need knowledge of what's going on in the macro and everything else, and you need a process and tools and a community to make you stronger. So big thank you to that community as well. Patreon, biggest finance community on the planet. Thank you all for making it possible. And thank you to the mods in the chat and everybody here. And I'll see you all tomorrow. Also, reminder, if you want me to do a minor update, let me know. They tend to be my least viewed videos, but they're so important if you're in miners. So let me try gauge interest. Thank you, everybody. See you later. Bye.